Monica. It is good to be back in Bangkok because I haven't visited Bangkok since the COVID. So it is my privilege to speak in today's session. So I'm currently the Chief Business Officer for Munich Re Digital Solution. So I know the previous session, Mr. Hagley talks about the ESG. So we're going to change direction a little bit, and we're going to talk about AI, or artificial intelligence, or machine learning models. Personally, I think if you have questions along the way, I don't mind interruptions. If you're comfortable to do that, just raise hand. Otherwise, I will try to budget maybe about 5 to 10 minutes at the end for questions. What I have prepared for the next 20 minutes or so, we want to look at the underwriting journey. What is the next generations of underwriting? We call them 2.0. And then on top of that, we're going to look at the tech component that's supporting that use case. So that is kind of where my presentation will go for today. So just now we heard from AIA, but some of you may come from the multinational insurers. I think as you can see, the digital strategies are more and more built in within this insurers, right? And you can see the commonality is about innovation, is about data-driven, is about how can we improve the customer journey, or how can we improve, or how to make the customer's experience to be seamless. But having a strategy is the first part. But how do you execute them, right? Where to start? If you're looking at your operation, what to do? So that is something that hopefully I can explore today with you. So if you look at the picture, I guess we don't have the picture yet. If you look at just envisioning the underwriting journey, right? If you just look at from when the paper application comes in, some of you has an e-app application, some of you has the underwriting engine, right? This is typically a rule base. It could be an external engine. It could be your own developed engine. Why do we need that? Because we need a straight through, right? We need to see what applicants can actually go through without any human interactions. This portion here is really the final underwriting decision. And you might be asking, if the rules already say accepted, why is not 100% of the cases accepted? This is because for some companies, they still perform the admin checks at the end, right? So for some of you kind of in the life side, life and health side, you see that some of these cases, sorry, where is that? Still have some condition, but majority of them should be accepted. 40%, this is reflecting the fully underwriting questions, because if you're speaking about guaranteed issue or simplified issue, of course you're going to have a very high straight to processing. But for the fully underwritten questions, this is one of the examples for Southeast Asia, the straight through is about 40 to 50%. So if you look at the pain points, the first point could be the low STP, because if it's a low STP, that means you're going to have a lot more cases that are being referred to the underwriters. But if you look at here, even if for those cases that are referred, actually many of them are decision standard. So can we actually shorten the customer journey? Because anyway, those cases are standard. Another complaint could be we asking too many questions. We see a lot of requests, how can we simplify the questions in the app form? Not just the base question, but also the reflexive questions. Another point would be, do we see a misdisclosure or non-disclosure, right? If we ask for a BMI, if we ask for smoker, do we really think people always be truthful? Also medical disclosure. Then if you go to the underwriter side, there's going to be a submission that is in PDF, right? How do you process that? How can we help underwriters to do that? How can we ask only the necessary medical evidence requirements? So all these are different pain points across the underwriting journey. So what can AI do? Or what kind of machine learning do to supplement your rule space? And this is something that I want to explore. But before that, I just want to give a quick example that in Southeast Asia, we have built the machine learning models, but we also have deployed them. So actually in production at the moment, where the AI model is supplementing the rules base. And this is real time. So it is not a batch thing. It is really a real time. When an application comes in, there is an interaction between the rules and the AI model. So if you look at our approach, here, our approach, because so the data that we have the disclosure that the applicants make. We also have the final underwriting decision from the underwriters. So you see a big portion that being referred earlier. Can we build a model to predict the ultimate final underwriting decision? Even better if you have a claims experience, because then you can calibrate your disclosure against the claims. Increasing STP obviously comes at a cost, right? Because if you want 100% STP, of course you can do that. If you do GIO, everything will be STP. But how about the risk side of things? How do you quantify and how do you make sure that your trade-off between the straight through and risk are managed? So this is the type of things that we want to make sure that when we develop the AI model, we need to make sure that we quantify the risk, that it is a word that we do things properly and that we manage the risk. So I mentioned that this is a crucial part. So we're providing a risk report for every AI model that we deployed for two reasons. The first reason is for each company, they would have a risk management committee. So before you deploy any kind of models, you would need to sign off from the risk side. So that's one part. AI is also relatively new from the regulatory perspective. So there's going to be a compliant. How do you demonstrate that the AI models is what we call responsible AI? Deploying the model is also one thing, but it's not one-off. You need a monitoring and maintenance. It's not going to be that you deploy a models and then you leave it in and then they will perform as expected. So this is not the case, and that's what I'm going to cover in the technology later. So if you look at 2.0, of course there's a 1.0, and the 1.0 is the current way of us doing it, right? I think a lot of companies, it depends on the market because different markets has different maturity, for sure. The first part is, I think there are companies that may be still using paper, but majority of the companies that we talk to actually have some sort of engine. Of course, it's with the different sophistication, given it depends on the business you have, but it relies a lot on rule space. And how to optimize the rule space, a lot of them use the descriptive analytics. So what we're trying to do in terms of that transition to the 2.0 is mainly has two components. The first one is the development of the solution. What are we trying to solve? What objective do we want from the model? How do we build the model so that it's approved and production ready? That's the first component, which is in blue. If you move up, which is a level 3, any kind of models you build is not going to make a difference in your business unless you productionalize it. Only if you put them in a production, then it makes a difference financially for you. So this is what we're trying to achieve. To achieve the 2.0, you need to develop the solution and then take it further. How do you implement the solution? This looks very complex. I think we heard that, from the machine learning models perspective, from the AI models perspective, the most important piece is the data. Without data, there's nothing you can build, right? And more, we see the data is getting richer and richer, right? So in the past, when we look at, or even now, when we apply for insurance, we only look at the disclosure at application. It's a snapshot of the applicants. You look at the historical claim, you look at the current disclosure, and you make decision. But more and more, because the data is being collected, we see a reliance to leverage other kind of data, right? The bank data, the telecom data, the medical records, even facial image. So if AI in general, with the proper data, it can address the different pain points within your insurance value chain. In terms of underwriting, there are two broad categories in my view. The first one is how to automate, how to streamline. So this is more about reduction in question, how can we make the process seamless and straightforward. So that's the first piece. So this is around increasing your STP, this is around personalizing underwriting. But on the other hand, we also need to look at from the risk assessment. So if you look at the risk assessment, this is interest for some of the market, a lot of them dealing with the misdisclosure. So for example, for some markets, BMI is based on self-disclosure, right? It's not a nurse-verified BMI. So can we use the facial recognition that typically you use for KYC to see whether someone is either, well, usually it's one way, right? Nobody's thinking is fatter than they are, but a lot of people will think they're skinnier and taller. So how can we know that the BMI that they disclose is reasonable? That's the first part. Another part would be smoker. You know, if someone said they are non-smoker, how likely are they non-smoker? So that's another thing that we're doing. In India, we have early claims of fraud protection. So basically, they try to predict what is the likelihood of an applicant make claims within 12 months of application. So these are kind of the type of things that we look at where AI is built to manage risk. And this is then combined with the automation. Because the way we envision of the underwriting 2.0, it's not about deploying a model. The way we see it is there are going to be multiple models that is used to address different pain points that works together within the underwriting journey. One of the things that, because having the human in the loop is still very important, right? The machine cannot replace human. And this is then one of the questions that usually we receive from the client is, how does underwriter interpret the result from the model? If the models give you a number 0.9, what does that mean? And why the model's actually giving that 0.9? So having this explainability piece is crucial so that the underwriters also buy into the process, that they know what they're looking at. If the case referred to them, they know why the cases are referred to them. What are the reasons? So these are part of the explainability that we included in the deployment of our model. We talk about the responsible AI. In Singapore, the MAS, which is the regulatory in Singapore, we work with our clients to make sure that the responsibility AI is met. And some of you may hear about FIT principles. Basically, the AI models need to be fair, needs to be ethical, needs to be accountable, and it needs to be transparent. So every models that we build, we need to make sure that these FIT principles are met. And I know that a lot of companies, usually once you have the policy on the book, you want to cross-sell, you want to upsell, you want to leverage your existing policy holders. And what we work with our client is that since you already have an AI model, if the AI model is updated with any information, updated information of the applicants, you can then leverage them to cross-sell or upsell. You can target them maybe a year later or 2 years later, but there is a chance to reutilize your AI model to do that cross-sell and upsell. These are, so our region, or regions that I'm looking after is from basically Asia, Asia Pacific, Middle East, and Africa. So you can see here, if we look at the type of things, it's just to show you some of the things that Munich Re is currently working on, which is more from that machine learning angle. I think in terms of the trend of what we observe across the board is, like I mentioned, there seems to be an exploration of what alternative data can we use so that we don't look at just a snapshot of a person at the time of underwriting, but we look at holistically, maybe their lifestyle, maybe their shopping behavior, their commuting style. So these are the type of data that a lot of insurers wants to explore. Even if we look at the across insurance value chain, a lot of the interest still on the underwriting side. Basically, an applicant come in, what is my risk score? How good am I in terms of my risk profile? And they want to use it to supplement the rule space. When we deploy our original model, we kind of contemplating whether the model actually can replace rules. And after looking at it, I don't think so, because there will be cases where it's not outliers, but it's maybe too high of a risk, right? So if somebody apply for too high sum assured, you certainly don't want the models to make a decision for you. So you might still have either the rules base or the human. So I think these three components need to work together. Different markets see different pain points, depending on the stage and depending on what the market needs. And I think for Thailand, it's likely going to be different as well. But if I just want to highlight the two things, so the first thing is if you look at India, where we have the dynamic risk calculator, why do we build this? Because we see a lot of claims that is happening within 12 months. But instead of looking at it at the time of claim, we want to look at what kind of profile at the time of underwriting that will result in those claims. So the idea of the model then is how can we flag those people who are very high risk upfront at the time of underwriting, so they need to submit additional document before we issue them a policy. That's the first one. If you look at South Africa, HIV prevalence are quite high. So, and if you declare HIV negative, the test needs to be done. But even though the prevalence is high, it's actually decreasing, and for the insurance population, is a lot lower than the general population, and most of them are well managed. So how can we then waive the test for those applicants that have a high probability of having HIV negative? So this is the two things that we're doing, but if you look at other places, we're looking at the health checkup data, for example, medical records. We look at the telecom data in China to really see what's your commuting pattern, what's your nightlife habit. You look at how do you visit a specialist clinic and so forth, right? So these are kind of enriching what you know about the customers. In terms of the interest, in addition of the STP, I think the fraud, waste, abuse are usually quite popular in this market, especially around the medical claim. So for us, medical is quite big in Middle East and also Southeast Asia. So these are kind of the things that we're trying to explore, both at the time of underwriting, but also at the time of claim. LLMs, of course, is now with the ChatGPT and everything, LLM is there. So Munich Re has purchased its own LLM as well. So we're trying to input our own data in it. This is headed up mainly by North America because of the extent of the data that they have. But we in Asia also trying to explore what could potentially be used, or what kind of use cases can we do with the LLM, which is large language model, by the way. So it is a life cycle, right? When you try to introduce AI project, there is a life cycle. I think the crucial part is really knowing what pain points do you have. Without the specific pain points and specific objective, the AI models cannot really achieve what you want. So even as you say about STP, you need to know what's causing the decrease in STP. And this is important before we even solutioning. Later on, as you go through the data preparation, preparing the models, all the way to monitoring, this is what I'm going to highlight in the predictor or in the AI platform. I'm just pause quickly here. Are there any questions on the first part of the sessions? Feel free to just raise your hand or interrupt if any. Otherwise, I'll move on to the next part. All right. Okay, so in the second part is really on the technology. And I'm not on the technology, but I know that Munich Re just recently launched our ML Ops, which is called Predictor. So I just want to kind of give a flavor of what does this platform do. When you build AI models, or when you try to explore AI use cases, there are multiple things to make it successful. The first one is you need a different expertise. It is not just about having data scientists. It's not about having just data engineers. It is also the domain expert. You need the right team of experts to make it happen. Having a POC is relatively easier and usually doesn't cost much to just perform and validate your POC. But how you move that into production is important. How do you embed them? How do you integrate them? What is the real-time latency if you do that? That's important. I mentioned it is not a one-off. It is not just about deploying the models and let it run for a few years. Things change, and you need to make sure that maintenance and to make sure that the AI models continue to be updated. You want the most recent data to make sure that your model consumes that latest data. The data and AI governance is just as important. You need to make sure that your AI is responsible and you quantify the risk. Any models you deploy will have an error. How do you quantify the error is the key. And beyond that, then you need really the technology to do it because it's not as simple in terms of deploying the model in the cloud. So what is ML Ops? Just a quick introduction. I guess if you split them into three, you have the ML, you have the development, which is dev, and then you have the ops, which is the operation. So on the first piece is really around the data ingestion and the processing. If you look at your insurance company, for example, the data comes and stored in different places. Not everything will be clean. Not everything will be all joined, nicely joined. And if you just ask your IT to say, okay, can you just give me an extraction of the data from the claims and disclosure and perspective? In our experience, this could easily take months because our requests usually never be on the top of the IT list, right? So it takes time. And because of that, then there's going to be a lag. So this is enabling that constant data flow to make sure that you have always the latest data. The model training, we need to build the model, we need to evaluate the models. This is under dev. So these are kind of what the data scientists really do to build that model. And the last piece, which is the ops part, which is the monitoring and the maintenance. So if you can see, that's really the whole AI cycle. That's how the technology fits in within that AI life cycle. So why is it needed? So these are the top piece is really the type of monitoring dashboard that we built within this platform. And why do we need it? Because the model deteriorated. Because things change, right? Even if you have underwriting guidelines, it will change over time. Applicants' behavior change. The target mix of people change. Your product change. So your model cannot be expected to continue to perform as is because things change. But if you have about 18 months or 2 years lag, by the time you update your model, things already change again. So having that constant stream of data that enable us to train the models at real time will be key to ensure that we continue with the trend and we continue to monitor. So this is why on the bottom end here, you can see that every time we do a retraining, then the model performance should improve to the expected level. So what do we monitor? So we have an out-of-the-box capabilities to monitor the AI model and the business performance. Obviously, we need the key model metrics, right? We need, if it's to increase STP, we need to make sure to see what is the uplift in STP after deploying the model. We need to make sure that from the risk side, it continues to be acceptable. Is there any pattern of people's behavior change? For example, the prevalence of questions, it's increasing. Or we see, for those cases with exclusion, what kind of disclosure typically they make. So these are kind of the case drill down. Do we see a trend? Do we see more volume? Do we see less volume? Do we see the STP level is different? Is any change on the business mix? What is the KPI in the AI? Is it successful? Is it not successful? So these are the kind of thing that we built in the platform to make sure that the different stakeholders can look at the performance. Okay, I'm not going to talk about this, but basically if you look at the bottom, these are the kind of things that the model do, all the way from ingesting the data, processing the data, model it all the way until the KPI. So it fits really well. If you see that the only piece missing currently is the translation. Because if there are any actuaries in this room, basically you need a projection to quantify the risk. And this is not something that our ML ops can do because we need a separate software to kind of do the projection and quantify. So this is the only piece that's missing. Maybe eventually we will, but at this point it's kind of done separately. This is just a quick picture, maybe it's a complex picture, but if you look at the right-hand side, then these are the type of stakeholders that will be involved in this ML ops, right? So in the model training, you have the data engineers, but in terms of the stakeholders, you have the business user. But if you look at that, you have a flow of the data either from the rules engine or from the back office system. It enables the multiple models to be hosted in the platform. It has the monitoring, it has the model training. So these are kind of what we are building, and this is kind of our MVP at the moment. So we start with specific business problem, but there are multiple factors that we need to consider. Do you have the right domain expertise? It's not data scientists or data engineers, they are crucial for sure, but there are the domain. Do you have the right underwriters? Do you have the right actuaries? Do you have the right risk management? Because having people who understand the insurance operation would be crucial. If you are exploring a new risk, do you want to have a reinsurer that can back you up with a risk? This is another part. Risk implication, I mentioned, changing that model error into what does it mean into your pricing will be something that your risk management committee would want to know. And lastly, building on the responsible AI, and all that is supported or enabled by the tech. So with that, I close my talk, and if any questions, happy to take them. Thank you very much. Khop kun ka.